So there are a bunch of ways to use ANEMOI and a bunch of different strategies, but in this video I'm going to go over something called bullish divergence. And so bullish divergence looks something like this. To start, you have ANEMOI telling you that a sell program is about to be turned on. And that warning comes from when you get this crossover, the 1 minute trigger and the 5 minute trigger. So if I remove everything else besides the triggers, you can see this crossover right here. And this is ANEMOI telling you that a sell program is being turned on and we can expect the stock to now begin selling off. Bullish divergence is what helps you time the bottom and when the sell program is pretty much over. And so if we go into the 1 minute velocity and we look at this leg down, all right, so we know that it turns on right here and price makes a low of 26.33, and if you look at the 1 minute velocity, we have a print of negative 0.1. As price sells lower, you can see the 1 minute velocity is getting more extreme to the downside as well. And when price sells over here, we can see that the 1 minute velocity from this low to this low to this low, the 1 minute velocity is agreeing with price, and that tells us that the sell program is still strong. However, if we zoom in to this bit right here, we can see that when price makes a low of 25.48, the 1 minute velocity is negative 0.43, and that's the most extreme print on the board. Again, if I remove everything else, you can see that this is the most extreme print. Okay, so what we want to do now is we want to count for 3 new lows, but velocity not making 3 new lows. So the first one is right here. Price comes down to 25.22, and you can see that the 1 minute velocity is not coming down with price. So that tells you that once you get 3 of these, the sell program is finished selling. Over here, price makes a second low, 24.94, and again, the 1 minute velocity is not coming down with price. So this tells us one more low and velocity does not make a new low greater than negative 0.043, that means that the sell program is over. And so when price makes this low of 24.48, but with the 1 minute velocity is negative 0.2, so again, if I remove everything else, all the triggers, you can see that when price makes 3 consecutive new lows, but 1 minute velocity does not, that marks the bottom. So here's your first new low, here's your second new low, and here's your third new low. And if I zoom out, you can see that once price made that third low, price started to rise. So if we bring back the 1 minute trigger and the 5 minute trigger, the sell program begins when the 1 minute trigger crosses the 5 right here, and it ends when you get the magic number 3 bullish divergences, and it turns bullish again when the 1 minute trigger crosses back above the 5. So this is on the 1 minute. We can also see the 5 minute as well. So on the 5 minute, the most extreme low was right here, and then price makes a new low, but velocity does not agree, and then price makes another new low, and you get 2 bullish divergences. Sometimes you can have a snapback after only 2 bullish divergences, if on the 1 minute you already had 3. And so you can see price making 2 new lows, but velocity is not, and that tells us that the sell program is finishing up, and we can buy this knowing that this is most likely the bottom. Now this is on the 1 minute time frame. Let's zoom out. This is the 1 minute and the 5 minute. Let's zoom out and look for bullish hourly divergence. So I'll stick with GameStop and use the same example on GME. So if we take this time period from right here, I'll remove everything else on the chart to make this a little more clear. So let's zoom in on this sell-off. All right. Now, how could we have timed this bottom? So if we take a look at the hourly velocity, we can see that the most extreme print comes right here at negative 3.2. And price at that time was 34.90. Then price continues to sell and makes the first new low with consolidation right here at 30.78. And you can see that the hourly velocity is negative 18.18. So as price went from 34.90 to 30.78, we have 1 bullish divergence because the hourly velocity is not making new lows. Then price comes down, makes another new low at 27.13. And again, if I remove the hourly trigger, you can see that this print right here is not as negative as it was over here at negative 0.32. And so you have your first bullish divergence here, your second bullish divergence here, And when price comes down to 24.64, that's your third bullish divergence. And you can see immediately, once you have your magic number 3, so 1, 2, 3, it tells you that the sell program is over and that we can expect this to be the bottom of this leg down. If I bring on the hourly trigger and the daily trigger, you can see that the crossover that happened right here is when the sell program was turned on. And to know when the stock will be bullish again, that's when the hourly trigger crosses above the daily trigger. This was bullish divergence on the hourly time frame, and now let's look at it on a daily time frame. And the cool part about ANEMOI is that all the rules that I'll be teaching you work on all time frames. So let's zoom in on BBBY through this sell-off. So again, before I showed you how the sell program turns on when the 1-minute trigger crosses the 5-minute trigger, that's on a smaller time frame. That's on a micro scale. On a macro scale, the big sell programs come on when the hourly trigger crosses below the daily trigger. And you can see that that happened before April, but April, the chart only renders till April. So you can see the hourly trigger below the daily trigger telling you that the sell program has already been turned on. And now if you look at the daily velocity, here's your most extreme print, and then price makes a new low here, and there's daily divergence, price makes a new low here, there's daily divergence, and price makes a new low. Once you have 3 bullish divergences, that marks the bottom of the leg. It tells you the sell program is done selling, and to know when to go long, you can either catch the long off the bottom, or you can wait for the hourly trigger to cross above the daily trigger. And this is where we actually went long on BBBY at just about 560 once we got this cross. And if we zoom out, you can see what happened after the cross. We crossed at about 560 and price pushed up to $30 in the span of 2 weeks. So that's an example of bullish divergence on the daily time frame, hourly time frame, and the 1 and 5 minute time.